What's all this business about Goldbach levels?
In this video, I want to show a buying opportunity for Tesla using Hoppy's Goldbach levels. So this is the stock price for Tesla on the 15-minute chart. So as you can see, we've come off of all-time highs. Let me zoom out a little bit. There we go. There's your all-time high. So we've come off of all-time highs, and now we are in quite a discounted area. So even if you use some real basic premium discount, okay, you can see that we are right at the equilibrium. Okay, now we can go a lot more advanced than that. Okay, so, and you probably just saw a glimpse of it there. So all prices are based off of the Goldbach levels. That's how the algorithm essentially works. So what happens is, based off of how much institutional buying there is or institutional selling, the algorithms play out in a predetermined way. And if there's buying pressure, then we move up within the dealing range based off of algos 1 or 2. And if there's a lot of selling, then we will run a sell program, usually an algo 1 or algo 2 or other algorithms which I haven't shared publicly. Now, when it comes to stock, things work slightly differently. Okay, so stock is very different from forex or index futures, right, in how it moves. You have to think about the Goldbach numbers and also which dealing range has been broken. So back in, let's say, 2020, when the price was below $100, specifically when the price was below $81, the Goldbach dealing range that was in play was between 0 and 81. And I'm just going to go through the Goldbach numbers for those who are new. So the Goldbach numbers are power of 3. So 0, 3, 27, 81, 243, 729. So what essentially happened was, when price was trading below $81, okay, the dealing range was from 0 to 81. So when price initially passed $27, that's when the dealing range expansion happened. Okay, so you can look at my previous videos if you want to learn more about expansions and contractions. And I also have a previous video on Tesla showing the historical price movements and how it was obeying Goldbach. But the purpose of this video is not so much an overview of exactly how stocks move, but the buying opportunity that may be present within Tesla round about now. Okay, so if you want the complete history of Goldbach, I have a lot of videos on Goldbach, how you trade stock and how you trade forex, and there's also a video on how you can get started with Goldbach. Okay, now the key thing to note is the high of Tesla's stock price is $414. Okay, now when price moved past $243, we had a dealing range expansion. So previous to that, the dealing range was between 0 and $243. Once price broke $243, the dealing range became between 0, the low, and the high being $729. Okay, that is your Goldbach dealing range. Now, the way Goldbach works is, within the dealing range, we have predefined levels of where ICT's premium discount arrays fall. Okay, so let me draw this out for you. So I have actually, let me show you the indicator first. So this is the indicator that I like to use. AMD Power 3 Goldbach levels. Okay, so if I just use an arbitrary number just to show you the theory, this is not the power of 3 to use for Tesla. I just want to show you what a Goldbach dealing range is. Okay, so this is essentially a Goldbach dealing range from 0 to the high. And within the Goldbach dealing range, predefined by mathematics, are where the premium discount rate should fall. So between 0 and 3 is the rejection block. 3 to 11 is the order block, fair value gap, liquidity void, breaker block, mitigation block. Then you have equilibrium. Then you have the bearish mitigation block, bearish breaker, bearish liquidity void, bearish fair value gap, bearish order block, and the high, the dealing range. Now, where is Tesla currently? So let's create our own Goldbach dealing range. So we know the high of Tesla is $414, which means we had a dealing range expansion. So once we pass $243, which we have, the Goldbach dealing range high became $729. So we can use a Goldbach fib. Now, if you would like to learn more about Goldbach, there's a link to Hoppy's official book in the description to this video. If you would like to learn how I trade my golden bullet time and price strategy, there's a link to my mentorship below. Okay, now, so we want to create our custom Goldbach dealing range. So the low of the dealing range we require is 0, and the high will be $729. Okay, now we have the complete dealing range. Okay, so where are we now? Let's have a look at the 3-month chart. There's more clarity there. Now again, what is this dealing range telling us? Okay, it is telling us that the high would be here. The equilibrium is here at the 0.05 level, and then the PDRAs will form here. So you would have rejection block, let me just flip these, they're upside down. There we go. So 0 is the low. Then you would have the rejection block, the order block between the 3 and the 11. This would be the fair value partition. So we call these Goldbach partitions. This is the fair value partition. Then you would have the liquidity void, and so on. Okay. Now, how is this information useful? If you've been on my channel, you understand there's a number of Goldbach algorithms. 2 of them are presented in Hoppy's official book. The one I like to share publicly because it's the easiest to teach is Algo 2. Now, Algo 2 starts from the rejection block to the breaker block. It retraces to the fair value gap. And then the logical conclusion is the bearish order block. Okay, now it's important to note that this breaker block step, we can be flexible there. The important thing is we start from a low, like a rejection block. We go higher. We retrace to the fair value gap. Okay, now where does everything align? So if you have a look at the stock price for Tesla, we have a fair value gap right in that fair value partition. Let me mark that out for you. There is your fair value gap. There's a 3-month chart. There we go. So we initially had an Algo 2 dip into that fair value gap. Okay. Now, it does not define the steps in between these. So we should go from rejection block to X somewhere, retrace back to the fair value gap, and then we ultimately would terminate the algorithm, or the high of the algorithm would be here at this bearish order block. Okay, So we expect price to go from here to here. Now the path from the fair value partition to the order block partition is not going to be a straight line. We know prices don't move in straight lines. Okay, so there'll be retracements and there'll be shakeouts and there'll be liquidity runs. But ultimately, this is where we would get to when it comes to algorithm 2. Okay. Now, we initially missed this move. This move to the fair value partition happened in October 2022 and price took off. But we have a second opportunity now where we may buy or be able to buy either in that fair value gap or close to it. Okay, we're in the liquidity void technically. Now, none of this is financial advice. Okay, don't be buying stock or selling stock or trading based off of a random person on YouTube talking about technical analysis. Okay, this is not investment advice. You should do your own research. However, we are in the discount of the dealing range after getting to a premium. Okay, we went into the premium and then we fell back into the discount. We dipped into the fair value gap and now there is a second opportunity to buy in a discount. Now, it's up to you if you want to take this trade. There's a number of ways you can do this, right? You could just buy at the spot price now. Okay, depends where you want to put your stop loss. But if you were to buy at the current price and you were to take it off at the bottom of the order block partition, okay, that is a 2.6R return, right? If you wanted a slightly tighter stop loss, if you don't think, let's say you don't think Tesla will go below $100, okay, the mid of the fair value gap partition, then you can have a tighter stop loss, and that's a 6x return. Okay, if you want to buy, if you're going to be very strict and say I'm going to put a limit order right at that fair value level, okay, that is a 22x return. Now, will you get another opportunity to buy in the fair value gap? Okay, we don't know. However, we are in a discount. We've already filled most of this fair value gap. So let's have a look at the percentage that we filled. Look, we hit the 50%. Oh, we missed that 50% by a tiny bit. So that's the visible fair value gap. Let's have a look at the fair value partition. Okay, when it comes to the partition, okay, when it comes to the actual partition, we hit it on the nose. We hit it exactly. Okay, do you see that? So this is the actual fair value partition. I'm trying to make it as accurate as I can. And I'll give you the price tool as well. 101.81, and the consequent encroachment was 101.92. Okay, so that is accurate as we can probably get it. Okay, we can go a little bit more. Now, of course, I could go in and put in the right exact number, but just for the purposes of demonstration. Okay, there we go. So we dipped, we filled 50%, or slightly more than 50% consequent encroachment of this fair value level. Now, obviously, have a look at the macro environment, whether you think Tesla has legs and whether you think it has the potential to go higher. Now, you might just want to take it off at this liquidity. Okay, nothing wrong with that. Okay, buy side liquidity right here. If you were to buy there at the current price and have your stop below the low, that's still a 3x return. Okay, you can run this for multiple stocks and you can find opportunities. There's a few videos that I've done on this. I've done Tesla, I've done Nvidia, I've done defense stocks such as Boeing. There's quite a few. Have a look. As always, do your own research, but the power of Goldbach is demonstrated on my channel time and time again. Do have a look at some of my videos if you would like to learn more about Goldbach. Of course, there's a link to the book in the description. And if you would like to be mentored by me using my time and price trading strategy for forex, index futures, gold, oil, and crypto, then there's a link to my mentorship below.